What is up, guys? All right, this is Derek again. So now we're going to start phase 3, okay? Phase 1, we went over structure, different type of market phases. You guys should have done the prerequisite, which was just like the basic understanding of Forex pairs, Forex sessions, different things like that. Phase 2 was all about market patterns. All right, so we went through market patterns, different type of patterns, how to trade them, where to locate them, how they identified the rules to them, how to trade within them, how to trade the breakouts and whatnot. Then you guys should have gone through a little tiny section that was types of trading styles like fundamentals, day trading, scalping, swing trading, and the definition of each. Okay, now we're entering phase 3. In this video, we're going to talk about candlestick analysis, specifically candlestick anatomy. All right, I'm going to get into candlesticks. I'm going to get into exact candlesticks that we're going to be using to give us confluence and confirmations to enter buys or sells. But I want to go over what a candlestick is, most important aspects of a candlestick, and things like that. Okay, so first things first, you have 3 different types of candles. You have a bullish candle, you have a bearish candle, and you have a doji type candle. Okay, then you have type of candlestick variations, but those are the 3 candles you have. So I'm going to start with the first one. First one is going to be bullish. Okay, so in this case, I use it as blue. Okay, that's a bullish candle. Every candle has its open. So bullish candles, opens, close, lowest wick, highest wick. So bullish candles open low and close high. Okay, so this opens low, closes high. This is called your highest wick. This is the highest point that price reached during this specific time period. And then you have your low wick. This is the lowest point that price reached during this time period. Now, what I mean by that is this. Understand what a candlestick is. So candlesticks are the relationship between buying and selling pressures in the market during a specific time frame. I'll write it out. So what a candlestick is. Candlestick is relationship between buying and selling pressures in the market during a specific time period. So what I mean by it is this. Let's say this is the daily time frame, this is the daily candle. That means for that daily candle, there's more buyers than sellers. Why? Because it closed bullish. Now, you could also find candlesticks on 1 hour. So if you go to the 1 hour time frames, that means each candle that you see is worth 1 hour. That is correct. So right here we're on the daily. That means each one of these candles were for day. So this one was more bearish than bullish. This one's more bearish than bullish. This is more bearish than bullish. This is more bullish than bearish. This is more bearish than bullish. This is more bullish than bearish. You understand? It's just the relationship between buying and selling pressures within that specific time period. So if it's on an H4 time frame, for the last H4 hours, it might have been more bearish than bullish. Okay, that's what a candlestick is. But I'm going to show you how to really see them and identify them. Okay, so now this is a bullish candle. The most important thing of candlesticks that you need to understand right off the bat, the most important part of a candles are its wicks and the body closes and openings. Understand that bullish candles open low, close high. That's why they tell you buy low, sell high, because of this thing. Understand highest wicks are, so wicks, either if it's the high wick or the low wick, are areas of support and resistance. Think about it like this. Inside of a bullish candle, what do we have? We have an uptrend or a downtrend. We have an uptrend. Understand this is the daily time frame. So there, imagine that in the 24 hours to make this day, there's 24 bullish candles. That means it was an uptrend. You get me? Inside of this daily candle, it's an uptrend. Inside of an H4 candle, you have 15, 16-minute candles. That's an uptrend, or so on and so forth. You understand? That's what it is. So when it comes to this, think about it like this. Why did price shoot up here but come down? Why didn't it just close up there? Two reasons why. Because it did not have enough buying momentum to maintain itself. And number two, it's a strong area of resistance and sellers are entering at that price point. You understand? Those are the two reasons why price rejected so hard at that price point. That is why wicks are very important. When you see a high wick, it means that price is going to reject it. Okay, that price wants to reject that price point and then continue to come down, or vice versa and continue to go up. That is what high wicks and low wicks do. That's exactly what high wicks and low wicks do. Okay, so now again, think about it like this. If we have, I'm going to go to a bearish side right now, but again, with the bullish candle, if the last 5 candles are bullish, then the 6th one should be bullish as well. It's not a trick question. If everybody's pushing you up, why are you going down? You know, if everybody's pushing you to the left, why are you going to the right? You understand what I'm saying? You guys get me when I say that? If everybody's pushing you up, you have no business going down. That being said, that is why when you have wicks, they give you a good indication of what price wants to do next, okay? So if we have a high wick towards the top side, that means it has bullish rejection. That means bullish exhaustion. That means that most likely when the next candle comes back up, we're looking to what? Possibly sell it or possibly see some sort of rejection. Not all the time, but possibly. Okay, the bigger the wick, the bigger the story. Understand that. Think about it like this. If you have 5 candles, right? Or let's look at it. Let me see if I can find an exact example. Let's say you have 5 candles. Let's say you have 5 candles, right? And 4 of them are bullish, and the last one, the one that just occurred, is bearish. What is there more momentum of? Bulls. There's still more buying pressure. Why? Because there's 4 candles and 1 bearish candle. But the last one is bearish. That means that price is starting to lose momentum and possible reversals are going to come in. So what are we looking for? We're looking for that 6th candle to come up and fill the 5th candle wick before it goes down. That is why wicks are very important, because they act as resistance areas and as support areas. Okay, they act as the highest point of the markets and the lowest point of the markets. So if I see a high wick like this, that's a massive wick. If you compare the size of the wick to the body, look at the size of the wick to the body. The wick is a lot more than the body. So what does that mean? Once I see price come into this price point, what am I looking to do? Then looking to sell it. I'll give you an exact example right here. So right here, what pattern do we have possibly forming? Obviously, we have lower highs forming. So what does that mean? We're in a downtrend. Perfect. Besides that, we see a lower high possibly forming now. We see definite indecision at this resistance zone area. And look at this candle here. This is a doji. I'm going to go over what dojis are in a little bit, but this is possibly a doji. So let's say I wait till 5 o'clock. Let's say the candle closes like this. What am I looking for price to do? I want price to come up. Why? Because it's still bullish. Understand that. I want price to come up, fill the wick. You always want price to fill the wick. You don't want to just enter off a sell. Just because you think it's a sell, you know it's a sell, doesn't mean you want to enter. You want best price. You want the best possible entry. So I want price to come up and fill the wick to then look for a sell somewhere in there. Somewhere in there, I'm looking for sells. I want price to fill this wick, then come back up. If price closes like this, again, if. So at 5 o'clock, by tomorrow, I'll know. But I want price, if it closes like this, I want to see price come up to then sell towards the downside. Why? Because it's filling the wick, and that large upper wick tells us what? Bullish rejection is telling us that sellers are entering the market. So in the bullish candle, most important things, open low, close high, high wicks, low wicks are the strongest areas in the market. Same thing for a bearish candle. Now, if we look at a bearish candle, let's take a look at a bearish candle. Let me just change the color. So a bearish candle, what does a bearish candle have? A bearish candle has the same high wick, has possibly the same low wick. But what's the, sorry guys, it's just the computer settings are off, but there it is. So what's the difference? Opens high. So a bearish candle likes to open high. It likes to close low. Then you have a high wick. Same thing. Highest point that price reached during this time period. And then you have a low wick. And what is this? Lowest point that price reached during this time period. You understand? So that's the highest point that price reached, is the lowest point that price reached. So what is that telling you? That tells me that, again, same thing. What does a bearish candle want to do? A bearish candle wants to, what does a bearish candle want to do? It wants to go down. So if it wants to go down, why doesn't it go down? Because it doesn't have enough momentum to maintain itself down there. Same thing. So in this case, why didn't price came all the way down here, but why didn't it close down there? Because there's not enough sellers to maintain itself. That's number one. Number two, it became a strong level of support. And number three, at that price point, buyers began entering the market. You understand? So that means once price comes back down to this area, what am I looking for? Possible rejection. So possible buyers entering the market. Maybe close out your trade. You understand? But you see rejection happening. Same thing. Again, I'm going to go into specific candlesticks. I'm going to go into specific candlestick variations, but I want you guys to understand like the gist of what candles are, the gist of it. So let's say I have a candle that looked like this, right? And let's say this is the daily time frame. The next candle, let's say I have one that looks like this. The next candle, what do I want it to do? I want price to fill the wick. Why do I want it to fill the wick? Because the last 4 or 5 candles are bearish. That means that it still has more bearish momentum. I want price to come down and fill the wick. And once it comes down here, what do I want to do? Look to see rejection to push towards the top side. Always wait for price to fill the wick. Always wait for price to fill the wick. Most important thing, always wait for price to fill the wick. Again, always wait for price to fill the wick. The bigger the wick, the bigger the story. Okay? So you have bullish candles that tell you buyers are in effect. You have a bearish candle that tells you sellers are in effect. And then the last one, you have a doji candle. And what does a doji candle do? So a doji candle, guys, can be bullish or bearish. It does not matter about the wicks. It matters everything about the size of the candle. So it matters about the body. That's what makes the doji candle, because of the body. They can have big wicks. A doji candle can look like this. A doji candle can look like this. A doji candle can look like this. Again, they could be bullish or bearish. Or a doji candle can just be flat like that. So again, this is called a spinning top. Like imagine one of those like a little Beyblades. I don't know if you guys know what those are, but it's a spinning top. This basically is consolidation. Think about it. Price came up, came back down. That's basically what this candle is that price doesn't have enough momentum to go bullish and it doesn't have enough momentum to go bearish. So price is just consolidating within that range. That is why when you see a doji like this at a high or low point in the market, resistance or support area in the market, a lot of times you see possible reversals coming in. Because same premise, if the last 4 candles are bullish, the 5th one should be bullish. If you see a doji candle, it doesn't have any reason to be there. You know, just because the doji candle occurs doesn't mean that it is going to reverse. But again, we're looking at our options. We're looking to see what it wants to do. Okay, so again, this is a doji candle, and this is a doji candle. What's the difference? The wicks. But again, for it to be a doji, it matters about the body. Now, what does this candle tell me? This candle tells me massive bullish rejection. This means that price was bullish. Think about it. If this is the day candle, that means, let's say 12 hours into the 24 hours, price was all the way up here. And then the last 12 hours, it came all the way down, meaning that there's some level of indecision, meaning that there's rejection at that price point. And if there's rejection at that price point, what do we want to do? We want to capitalize off of it. So if we see a candle like this, what does that tell us? Price is going to sell. We wait for price to fill the wick to then sell. If price closes like this, I'm waiting for price to come up and fill the wick to then sell. Same premise. You want price to fill the wick to then sell. Now, this is the opposite. Now, this could be bullish or bearish. Okay? Same exact thing. It's a doji candle, but it has a massive lower wick. So these 2 candles are called pin bars. Like, think about it. Like a pinball machine. You hit it, then it just goes bing, and it pops right back up. Or you shoot it down, and then it goes right back up. It's called a pin bar. So pin bars are like this. Massive rejection. So this is telling me what? buyers are into effects. So this candle you typically find on resistance areas, high points. This candle you typically find on support areas, low points in the market. So what do we want next? We want price to come down, fill the wick to then reject and push up. Okay, so now these are all doji candles. They don't have the same emphasis as bullish or bearish candles, but if they have large wicks, they do mean something. Doji candles mean they're basically indecisive candles. Price does not know what it wants to do. Price is always going up or going down. It's either buying or selling. It's either uptrending or downtrending. You know, price rarely ever moves sideways for a very, very long period of time. So doji candles are important because we can possibly capitalize on reversals. We can possibly capitalize on intraday moves towards the downside or towards the upside if price is in a rectangle. Or maybe this is going to be a doji candle. And what pattern is that? Again, we just went over this. Hold on, guys. Let's say this is a doji candle, right? Let's say price closes here like a doji candle. And we have this massive trend line. What pattern is that? That is a descending triangle forming. So if that doji candle closes, it's an extra confluence to then enter for a sell to then push it towards the downside. And this little push can be, again, 30 pips. 30 pips a day will change your life, guys. 30 pips, $10. 30 times 10 is 300. So that's $300 a day. That's a good amount of money, guys. Great amount of money. So this is the basic video on candlestick anatomy. This is the first video out of 5 or 6, I believe, that I'm doing in this phase. So any questions you have, feel free to contact me. Like I said in the intro video and the intro thoroughly read section. I hope you guys enjoyed. Again, this is the basic candlestick anatomy. Enjoy the rest of the videos. Bye-bye, guys.